First of all, everybody, welcome. Thank you so much for taking your time today to be with us. We have literally been doing this Equity House since 2021. I have lost count of how many of these we've done, and this is pretty much our Equity House is a division of our company, Equity Platforms, that allows us to connect with community. But I'll start from the top. Welcome. My name is Michael McConnell, Head of Community for Equity Platforms, and I'm thrilled to host this Capital Raising Roundtable strategies for building a 1 million plus real estate portfolio. And right now, we're living in a time where ownership itself is being redefined. The $330 trillion global real estate market is no longer reserved for the few. Technology community and new forms of capital are opening doors that used to be locked. And today we're here to talk about how to walk through them. So the truth is, about 90% of millionaires built their wealth through real estate, but every one of them started with something simple, that first deal. And the difference between dreaming about wealth and actually building it often comes down to access to capital, how to structure it, raise it, and multiply it. And that's what today's conversation is all about. So I'm joined by three amazing powerhouses. One is jumping on very soon, but let me get started with the introduction. So at first is my buddy, who I just got had the opportunity to hang out with in Las Vegas and talk shop and have this exact conversation, which is one of the inspirations behind this event. Donald Wong, founder of DNA Financial, a strategist in private lending and portfolio structuring, helping investors access creative capital and scale their holdings with precision. So Donald, just please give us a 60-second little intro. Anything that I missed, please add.
There it is. Mike, I appreciate it. I'm kind of going down memory lane right now. Like just at the beginning, it- during COVID, right? I'm transitioning out of the broker dealer financial advisor space, and I'm thinking about going independent, right? And like I'm just literally fired up about all of the new information that I have access to. Learning about capital markets, learning about laws, learning about the history, of the stock market and asset classes. And so, although I've been, licensed since 2007, 2008, right? I come from the broker dealer side, right? Which you work for an insurance company or an investment um, uh, broker dealer, and you basically do a lot of, retirement and insurance style products, right? And so going independent, us, planning to open up the first Black-owned wealth management firm here in the state of Nevada. I'm fired up, right? And I'm, like having this dialogue with Vern, and he's cooking up something in the background too, right? And it was equity coin, and and we've developed houses and platforms and everything. So, just going back to the beginning and to see where we're at now, I'm super excited for the conversation. I'm looking to add point of view and perspective for overall wealth building, and I'm excited to really have this dialogue. So, thank you very much. I'm excited to be here.
Absolutely. We're excited to have you, and we will have a portion of this event where we open it up for Q&A. Next up
Awesome.
on the list is Patrick Toussaint, which I haven't had the pleasure of meeting in person, but Patrick Toussaint is a managing partner at Tempora Aegis Group, a venture finance expert. He's a venture finance expert, bridging institutional investors with local developers to help scale community projects into seven-figure portfolios. And the great thing about him is what we're going to touch on later is how he went from working as an NYPD detective to owning a bunch of property in Brooklyn. So that sort of 9 to 5 to, real estate mogul transition is something that is always interests me how people manage to pull that off. So we'll unpack that. But let's jump right into the questions. And while I got Donald here, this question is targeted towards you. And least I forget, guys, I'm so sorry. We have Vernon J, founder of Equity Platforms, on the call. He's going to be in the background,
I'm
sort of.
just the owner over here,
He's
Mike.
just
That's
always
it.
providing that support. But let's start this off the right way. So, Donald, we often hear a lot about building $1 million portfolio, but in today's market, that number sort of carries new meaning. How has the definition of wealth and portfolio success evolved, especially in the economy driven by inflation, digitization, and new forms of capital?
Absolutely. We live in a different world, right? AI is kind of speeding things up, and it's really going a little bit quicker than probably what we would have imagined, right? Chat GPT was getting unveiled, I know it's been a project in the background, but going public maybe a couple of years ago, and now they're basically, receiving investment from all of your largest institutions, right? And and it's the fight for compute, right? Because of everything that kind of comes next, and with the speed that like we're just kind of seeing of evolution and singularity, what wealth means today is very different, from what it was 10 years ago. So, like let's kind of unpack it. Wealth is what you own minus what you owe, right? And, you know, um a decade ago, these kids and athletes and they're going to the draft class and everybody wants to be a millionaire. Today, people want to be a billionaire, right? And the reason they want to be a billionaire is because they've, Jay-Z, went from a $500 million and a decade later 2.5 billion, right? Like his net worth has went up 5x, and it's because of this fast environment that we're in, right? And so what we're seeing um what we're seeing with wealth, right, is property values have increased, right? I think over 47% of homeowners are have at least 50% more equity in their home, which means that they're equity rich, right? And that's a great situation. We're seeing the valuation of companies. I remember when Apple and Amazon were just talking about breaking the trillion, right? And you look up in less than 10 years, and they're three, four, breaking $5 trillion, right? And companies like Palantir are getting there a lot quicker, right? But on the other side of the spectrum, right? Like, I don't know if everybody's already millionaires on this call, right? But it's real in the field, right? And we deal with real people, right? We deal with individuals, we deal with small businesses. Just yesterday, the daughter had a soccer game, right? And she's playing soccer all day long, right? But she had a football game yesterday. And so we stopped at Whole Foods, right, to get two salmon bowls, right, within the 30 minutes between the time that she had to change and get ready for the game. It's $40, and like we're okay, right? But like as much as I talk about pricing, right, everywhere that I'm at, right, like I don't know what that is, right? And the cost of housing has went up. We're in insurance. The cost of insurance, like $10,000 a year for maybe auto and home insurance used to be a big account, and now it's every account. So inflation is sticky, right? A $50,000 to $60,000 lifestyle, pre-COVID is now $120,000 lifestyle, and income is not going up as quickly as the expense, right? And so, to land the plane and kind of answer that question, wealth is a lot different on, both ends of the barbell. And, like I think as, like a community and culture, right? Like we have to be equipped with the tools, with the information, right? And, just with the access, right? To, just kind of improve our situations and strengthen our situations. So hopefully I wasn't too long-winded on that, Mike.
No, what I got out of it is also at the end there, and thank you for sharing that. And those salmon bowls at Whole Foods are ridiculous, but is also leaning into community, right? Because a lot of times if you don't know something, I'm certain there's somebody within your circle that knows it, right? And that's why we're here today. We're here to connect you, the people on the call, with folks like Donald Wong, like Patrick, and even Christopher Pitt, who is huge into community real estate building, and this is why these exist. I really feel, also deriving from what you said is things are, yes, getting more expensive, but that means that we have to constantly evolve our knowledge of these industries, especially the finance game. So thank you for that. Patrick, do we have you just really quickly? Let's try again.
Uh, you got me?
Ah, there we
Yeah, we can
go.
hear you. There it
All
is.
right, man. They had you sounding like Mickey Mouse over there, Patrick.
Okay, okay. Well, good afternoon, and thank you for having me. And thank you for the invitation. Uh, quickly about me, I got into real estate. I'm a retired New York City detective, born and raised in Brooklyn. But I always knew that there's something always bigger out there. Um, I know that the system is rigged. I know what they teach us. They just want us to be just robotic on an assembly line. And society don't want us to think outside the box. So I like what you said earlier, Mike. I'm very good at looking at value. I always look for value. I know when we get together, I can hear something from certain people, and I know that they have something to say. So what I go to say is that I was about 20, 21 years old, about to join the police academy, and I had my neighbor. He was about a year older than me. But he was at the time he was an unlicensed street pharmacist. And I said, yeah, when I get into the department, I'm get a nice car, I'm get this, that. He says, Pat, just know what you want to do. So once you get in there, he said, save your money, stack your money, invest, and he said, then buy real estate. And that always stayed with me. And I've always stayed trying to stay below the radar. And I was buying real estate when it wasn't fashionable. It wasn't the thing to do. I was telling other people to buy real estate, buy, and they're like, I don't want to be a landlord. And we had that herd mentality when somebody said something in our community and we followed, and it was like the Pied Piper off the cliff. So make a long story short, I made a moves. There were sacrifices, at the beginning, and now it's just turned out to be a tremendous windfall. And sadly, quite often I just see a lot of us where we're just going through the whole affordability crisis because we didn't know better, we didn't plan better. People, when I see them, 20, 30 years later, they're like, why didn't I listen to you? I had the Rolex and the jewelry and the fancy cars. And now when they're older and mature, then they realize that there was no value to that. And that's the sad part. So now whenever I could make a difference, I later, that information there, and quite a few people around my circle has totally capitalized on that information.
Pat,
Excellent.
yeah, I want to jump in real quick because Patrick, thank you for joining us. Patrick has been our neighbor in Brooklyn for 20 something years, probably almost 30,
6 years.
probably almost 30 years. 26 years,
98, I
yeah.
came down here.
Almost, right? So, what theme I want to bring out? I just want to bring out a theme here before we get into that next thought, which is, wealth takes time. Wealth is a exercise. It's a muscle, right? And seeing something that over time and being able to understand that going in, right? I think is important because this is not going to happen overnight, and it's building blocks. So I just wanted to bring that
Yeah.
that theme in as we go into the next point.
Yeah, and Patrick, I got a question for you because I kind of have a similar path with starting at a 9 to 5. I was working at a hospital, and now I'm an entrepreneur. Let's talk about that, like first deal funded. Let's talk about that first building. What were some, I don't know if you have some creative strategies for like new investors, but I'm pretty sure there's somebody on this call, that's going to be listening that's like, man, I want to get my first building. Man, how do I go about it? What are some practical or creative strategies for investors to overcome some of those barriers? Could you touch
Okay.
on that?
Our language, our mindset has to evolve. Um, so I was lucky that my first building, I was a detective in Bed-Stuy during the end of the crack years, which was from like 86 to 94. There was a lot of abandoned buildings there. But I kept saying, I took a business class, I was a business major. And I remember a professor told me in 87, all these hoods, all these ghettos, they're not gonna remain the same. They're gonna evolve. So now we have gentrification, but back then I didn't know a word for it. So what I go to say is, I know a lot of us we were told that it's hard work. Let's evolve that. It has to be smart work. Okay. That's number one. Number two, there's other people quite often in our communities. Our kids tend to go left. They might have been um, on drugs, alcohol, mental illness, incarcerated. So the level of responsibility wasn't there. Plus, there was no financial structure there. So you do have people in our community, especially in our churches. Um, our Black churches used to have a lot of property because their kids weren't responsible. So what they did was they used to deed it to the church. But you can find different people, if you have integrity and sincere, so on and so forth, they want to see something, build some type of legacy. I don't have any kids, and I feel that way. Like, wow, so I have everything in a trust, and it's like, how is that going? What generation can I leave it to? Because my nephews, I don't think are responsible and can handle it. So definitely saving. I play the stock market too. A lot of people say with the stock market, you gotta be diversified here and there, so on. Look, if you're in a roofer, if you're an electrician or plumber, HVAC, and you do it well, that's your trade. You have companies out there, you can look at the Magnificent Seven. I mean, they're just making money hand over fist. Elon Musk, I just invested not too long in Tesla. I knew that there's going to be a run, and I watch a lot of YouTube with Tesla just to see what's on the horizon. So we're not even up to the run up. So there's different things with Google, with the data centers. I think Donald spoke about it earlier. There's new phases that's coming up. So you want to be on the cutting edge, so get in on the ground and make that money. You can take it out, and then you can diversify with your investment.
And Patrick, I want to piggyback off of that because it's important that we're not afraid of communities, right? We're not afraid to go to East New York, and own property. And East New York is probably one of the last vestiges of affordable housing in Brooklyn, New York. I don't think there's any other areas, or North Miami, South Los Angeles, right? I mean, these are areas that have tremendous value and will not, remain in blight, for much longer. So we have a choice. We have a choice right now. Do we say, oh, we don't want to invest in those areas because, it's too rough, it's too this, or do we actually have vision? And the properties that, just to give you context, guys, the property that my family owns in Clinton Hill, we bought it for 150,000 in I think 20 something years ago, like we said. And today, back then there was a rat infested warehouse on the corner. It wasn't all that, right? But today guess what? That warehouse is a 50-story tower, right? The neighborhood has completely changed. That $150,000 investment property is now, almost 2 million something,
Million.
tremendous. I mean, tremendous kind of, vision that it took. And the people that my family told my parents that they were crazy for buying in that neighborhood. Same thing that they told me when they went and visited my first property in East New York, in Brooklyn. They said, "You want to buy this? You sure? Look at the block." Yeah, and now it's changing. Now it's evolving. Yeah, that's what happens. So I just I really, these are like really gems that I want to just bring to the surface so that we can apply them in our lives when we're going about and investing, and we're seeing something that may not be the best on the surface, but if we dig a little deeper, we can start to create a vision.
Yeah. No, and you've done a really good job. I also want to point this out. One of the strategies that a lot of these big developers use is to amplify all the bad news going on in these neighborhoods. The rape, the murders, and all this stuff. Some of this stuff is just blown out of proportion and really amplified, and they zero in on it because they're trying to destroy the image of the neighborhood so nobody or their competitors will come in. But what Vernon's family did was they purchased the domain eastnewyork.com, and they started posting positive news on there. Some political news, some neighborhood news, positive things that were happening in the community, and it really had an impact. It really just sort of changed the image. So we have to watch out for these tactics. Like Patrick said, it's a rigged game, and we just have to understand, what they do and some of the tactics that they use. One of the things I know that people are very interested in here is the alternative ways in which people can raise capital. Let's call it beyond the banks. And I want to target this towards Donald and whoever else wants to talk about this. But traditional bank financing is only one piece of the puzzle. Don, can you touch on just what are some alternative capital sources, such as, like private lenders, syndications, crowdfunding? Can you touch on that a little bit in your experience with wealth management and real estate?
Absolutely. And you know what, I want to kind of piggyback off of what everybody just, kind of spoke about in value, right? But the ability to see value, right? So I graduated in '07, right? And got right into the workforce, right? And between 2007 and 2010, we understand what kind of happened in the real estate market, right? And I just want to, kind of use this as an example of, and Patrick kind of came out and alluded to this with his ability to see value, right? With him buying in East New York in the late 80s and 90s and Vernon's families over, 25 years ago, right? With 2010, the perspective was, look what just happened with the Great Recession, right? And the market was bearish. There was a lot of supply and property values were at all-time lows, right? People that understood how to see value, right, were buying here in Vegas, they were buying dozens of high-rise condos, right? Because they were 88,000 or 104,000 at the Palms Casino, right? And from a benchmark of 2010, to 2012, right? Some people who were a little bit more risk adverse would say, well, you know what? That condo is 110, now it's 140, I don't want it. In 2014, it was 140 and now it's 170, I don't want it. All the way to 2018, 2020, where that same condo is now 400,000, right? And some people may want to jump into the market, right? But if you do a little bit of international traveling, you may get to an international space and you're like, you can get this beachfront land and this, you know, high rise of luxury living for 140,000. So, like with the valuation, with the value conversation, I think that's important, right? Regardless of what your risk tolerance is to be open, right? Like of kind of understanding what value looks like, right? And so with that, Mike, I kind of want to go and answer your question. Um, Creative financing, right? My philosophy is really, it's a little conservative. It's kind of like Warren Buffett-esque, right? Who's sitting on a lot of cash right now. Like I enjoy, like the strategy of not taking as much leverage, right? So, like, kind of managing the cost and, managing the out of pocket, not the out of pocket cost, but managing the spread, right? So if I could, go in and leverage on a building and get paid $100,000 to buy it because it has so much equity and have a equity and thin razor, margins on what it earns, that's good, right? But I would prefer, right, to be in a position to, be able to 100% afford a property regardless of the expenses that comes with it, right? Have no mortgage insurance, have a lower cost of debt service, right? To where when that rent roll really starts to add up, right? Like my monthly income and margin on that property, it produces more, right? Because I went in with less leverage and I kind of went in with a responsible purchase. So with that being said, like I really want to kind of talk about the advancements of what we do, right? Like here at Equity, right? Like I think digital assets, like this, we're in the first inning of these digital assets. The process of tokenization, right? Where we're basically taking a physical asset, right? And we're taking a form of ownership digitally on the blockchain, right? Which it reduces the barriers to entry, right? It allows us to have fractional ownership. So for properties that we were not really able to have access to, right? You know, big multifamily, you know, properties or commercial buildings. Equity Share has built the platform, right, to where community developers can come to this platform, right? You know, like they can um you know, they can make their ownership digital. And I think, you know, like that in itself is amazing. And I'll talk to tokenization because I can take you through strategies to say, hey, well, you know, you can go find houses with a lot of equity and you can do wholesaling. Or I can say, hey, you can go for private money and this is what this laundry list of lenders look like. But in all reality, in today's environment, you're paying 5 points. It's not a paper, right? And you know, like on origination, right? So on a $500,000 loan, it may cost you $25,000 in capital. You're paying a 10% interest rate, right? And so once you crunch the numbers, that can, you know, it can, you know, stretch the margin. You can partner, right? You know, with a money guy like Pat to say, hey, I'll go find all of the deals, right? And yeah, I'll do all of the work and you just bankroll it and we'll split it 70-30. So there's a lot of innovative strategies, and I know Vern is in the space, so I'll let him kind of talk to some of those innovative strategies. But I think I'll just kind of answer. You know, fractional ownership I think is amazing. You know, you're able to buy digital real estate assets in the forms of real estate investment trust or real estate funds on the market, and but this tokenization is really a game changer because if we have a $20 million building, right, you know, like where the organization of that building is structured right, and you know, like the community impacts of that building is right, we can come in, you know, with as little as whatever we want to do, 1,000, 25, $5,000 worth of ownership, and be on the cap table at the beginning, right? Control the narrative of what happens with that building, right? And you know, like be able to share in the proceeds of the expansion of that building, right? Because you know, we're pretty much going after opportunities that a lot of people may not be looking at the valuation the same way. So not trying to be
Yeah.
long-winded, but you know, I'm gonna kind of land a plane on
But
tokenization.
yeah, so
Yeah,
Don, so Don, even
Vernon,
so, yeah,
Vernon, no, because
yeah.
let me frame this
All
because
right.
I don't want to put and Donald, thank you for going in tokenization, but I want to simplify this
Yes.
for
Okay.
for
Yeah.
those new to it. Vernon, just please explain tokenizing real estate and what that actually looks like in practice and how it can help an early investor or small developer. Just trying
Well,
to
you
frame it.
know,
Perfect. Perfect.
so I mean, you guys hit it on the kind of the nail. And the way I see it in the future, the sequence of events that takes place is first thing you do is you own a fraction of a building, right? That's going to be your first entry point into real estate ownership. You're going to own $1,000 worth of a building, and what that does for you, it gets you an inside track into how that building is operating. You know, who are the players? You can get advice from the different partners that you know have that property. So you take that knowledge and now you're able to buy your first asset. And buying your first asset, I think for anybody is going to look like using a program, using a first time home buyers program. You know, I use NACA for my first property. I'm sure people on this call probably have heard of it. I have at least, you know, a half a dozen people in my circle who have gone through the NACA program who own one guy owns a 3 family in Clinton Hill, Brooklyn, which is where Patrick and my family own property. You know, that's an incredible investment. You know, I was able to buy a commercial building, 3 residential units, and a retail space using the NACA program as my first property. That was my first piece on the chessboard. And I think what's important here to bring out, because this conversation is about getting that first million, you know, it's about using the resources that you have and taking the risk to get that first piece on the board. And it doesn't matter what the market is. I want to make that clear, guys, because people say, oh, we're going to wait to time the market. There is no timing the market. The market is now. The market is now because here's the thing, 20 years from today, we won't even be, it'll be so trivial talking about the percentage that you were able to buy this property at, like versus the market. It won't even matter because it's going to be so much more valuable, right? So my point is, get in now. If we there are programs like NACA, FHA, and really, at the end of the day, there's no reason not to. I think the only reason that people don't do it is because they don't want the responsibility. But like Patrick said, it's either we take on the responsibility for ourselves, or, you know, when we get older and we need that retirement and we need to have something for ourselves, now we're looking for other people to take care of us instead of being able to take care of ourselves. Right. So, yeah, that's kind of, and when we talk about tokenization, it's simply like, again, it's just simply taking an asset and being able to allow other ordinary people to be able to take ownership in that. We've sent out with Equity Coin, which was the first digital token backed by affordable housing. You know, we've sent out over $40,000 in dividends to our token holders in the last 2 years. And that's from our, you know, pretty modest portfolio of properties. But you can imagine taking the same system and being able to create other communities around the country that can take an abandoned building on the corner and be able to say, you know what, we're going to come together and rebuild that property, own it, and not only build up the community, but create generational wealth. That's the marriage that we love going into. So
I bet.
And you know, Patrick, I want to throw this towards you because you know you know all of this is fantastic. I love this information, but you're one of the OGs here who saw the vision back when everybody was trying to run from these neighborhoods. You were investing in them, and so much of success is about discipline and mindset. So let me frame this. So before somebody, let's for new investors, before investing, what are non-negotiable financial habits that people should have in place to build sustainably toward that first million?
Non-negotiable, I would say discipline in your finances. A lot of times with influence of those who are around us, if you see someone, they're doing something, they have a proven record, they have a track record, you see where they are, where they were, and where they're going to be, that's who you should latch on to. I am going to say something controversial. Um, a lot of times in our community, I told you I'm not married, I'm divorced, 2 long-term relationships. What happened was when you want to do something, take it to the next level, you're going to have a lot of naysayers and you're going to hear a lot of loser language. So if you're the rule for the electrician, whatever profession that you are, you do it very, very well. People are going, oh, they don't want to give you credit for your knowledge base. They want to say it's a high authority. They're always going to want to say, and it's not to, you know, attack anybody's religion. They're going to say, oh, you're blessed, or you're highly favored, so on and so forth, or just leave it up to God and so on. And when you hear that language, say time out, you listen to that person, put them in their little space, separate yourself from them. But if you're someone that says, you know what, I see that property there, I could develop it, I could buy this, I could do that, wherever you go, because you're that person. You've been there, done that. So you know what the value looks like. That's who you want to be around, not those that's wishfully thinking about wealth and think that it's somebody on the outside. Or not only that, look for other ways. When we're around, there's so much skills among us. So like I said, I'm not an attorney, but what I started doing like within the last 5 years is I started doing living trust because I started seeing a lot of people in our community losing their homes for lack of information. I think Vernon, when you came on, we came on, I think when I spoke to your father, he bought his house for like 180, 1980, 1998. I came later on. I bought an abandoned building that was abandoned for 5 years. I paid $50,000 for it. Everybody said I was stupid. All right, I bought it. I fixed it up. I bought the one down a block. I fixed it up, and I bought the one next door. So I own 3 properties right there. Just to give you, and I'm not trying to sound braggadocious, but I am going to tell you the numbers. I started doing my own LLCs. I did my own operating agreement. I'm going back and forth with the bank. I had 2 properties on the block with no mortgage on it because I refied. I bought some other properties out of state. I just refinanced 2 months ago, and I just pulled out $2 million on both of them because I got looking for some other deals to do some other things. So what I go to say is that when people say I'm an attorney, I have my CPA and I have my Series 3 and 63 and so on and so forth. And at the closing table, I got to run away from these lawyers. They have all these degrees, so on and so forth, but they have no money. So I may not have that formal training, but people that are self-taught, that are hungry, that are motivated, they will run circles around, quote unquote, the establishment.
Man, you said a mouthful right there, man. It's so funny because me and Vernon, we all got to hang out because we often talk about that. Is there's a lot of people that may have the experience and degrees and stuff like that, but there's nothing beats that real world knowledge, especially with real estate. When we were doing the waterfront property last year, I remember I feel like I didn't talk to Vernon for like 5 months. I mean, he would send me pictures. He'd be in a hard hat, knocking down walls because some contractor gave him a quote that was he knows he was trying to pull his leg. So that comes with real world experience. That comes with talking to guys like you and passing off information. And thank you for that. And speaking of information, and Don, I'll throw it to you. This is open, but like some resources. You talked about like resources and self-education, and I'm going to frame this for wealth building and or in finance and real estate. What are some tools? What are some websites, programs that you guys can recommend for the audience here that you like that have helped you? Donald, I'll throw it to you.
Absolutely. So, kind of my personal thing that I like is listen to a lot of podcasts, right? Like a lot of YouTube. CNBC does a lot of, their, I guess, informational, short videos, right? So financial networks, I love CNBC. I love the Schwab network, right? Like they show you how to, trade options and look into currencies and commodities and different things like that. So financial network, podcast, YouTube. I know there's a lot of resources for master classes and different communities, but I think with information, kind of being everywhere, right? You're able to curate, your educational, your learning experience the way that you want. And so I'm always, kind of taking in new information.
And that's baked into a daily habit, right? Like waking up in the morning.
100%.
First you
100%.
whatever you got to do your prayers, your stretching, your yoga, whatever you're into. But
Yeah.
I would imagine that that's baked into a daily schedule.
100%. Yeah.
Oh,
I mean, I'm grabbing coffee and breakfast. I got the financial networks rolling when I'm taking Zara to school. I'm, kind of plugged into a podcast. After I'm getting through, my night routine, I'm kind of looking at YouTube videos. So it's just a process, right? And um, I think
mhm.
when you can do behaviors, right? So when you can take actions, right, that kind of lead into behaviors to where you don't have to think about it and they become second nature and conditioning, right? Like it makes it easier, right? And just being around that information does a lot for me. 100%.
And Patrick, we talk. Thank you so much, Donald. We often talk about access to capital and programs that exist out there. Have you ever taken advantage of obviously this conversation is about building that $1 million portfolio. It really blows my mind how much money is really out there for people to access. Have you come across any programs that will help people with capital and raising capital that you like?
Well, um, I don't like to be held hostage by by these outsiders with with money. I don't do hard money at all. But I've saved my money. I've done my cash out refi, like I mentioned earlier. I do watch a lot of YouTube. And I remember, you know, you got to look at it from a global perspective, what's going on. I remember back in March and April when Trump was like, yeah, I'm going to put 50%, 100% on tariffs on China and all over the world. And the market was sinking. It's like, oh, what are you doing, Mr. President? I said, "Oh, well, this might be a good time to buy, And he was the ultimate insider trader. So I'm looking at Facebook and people say he's dumb, he's stupid. This I said, no, no, no. I said he's crashing the market on purpose. Get ready to buy the dip. And I sat there and I watched. I said, should I buy now? Should I buy? And I think by April 9th, I said, okay, I think this is it. And I put my money in because it was down maybe I don't know 1,000 and change, and then it shot right back up. So that was all rigged. For when you look at Howard Lutnick and Bassett and all his Wall Street boys, Trump has been in office for 9 months. He's already doubled his wealth, and he's just continuing. Yeah, him and Elon Musk had their little schism, but they got back together. And then what Musk is doing right now, I mean, it's only scratching the surface. That's number one. Number two, there's another cheat note. Look at the big investors. Who do you like? If it's Bill Ackman and so on and so forth, see what they buy. And if you want to know what they buy, certain things Trump can't buy, but there's Donald Jr., there's Eric, there's those around him. Look around him. Google their names. All you have to do is put the person's name and put F-13 filing. It's going to tell you what they bought, what they're buying, because they have all of that insider information. So you could just pin the tail on the donkey, because this guy, his net worth always goes up, and they sit on different boards and their access clubs and their conversation they have with the elitists. So, but what they got to file is that F-13. Those different filings are going to tell you what they're looking at, and I would just, follow their trail.
Excellent. Thank you, man. Now, Patrick don't play, man. My man is going deep cover. That's what you got to do, though. Beat them at their own game. So we're about to open it up for questions, but Keisha in the chat says REDI. REDI is a free real estate program for people interested in getting into real estate development. Please click on that link. When you get a second, and check that out. Thank you so much. And if you have any other programs, please drop them in. Share that information. We welcome it. Because that's for us. That's what it's really about. Community is here to share resources and information. Vernon, I would actually throw the question to you as well before we open it up. Let's talk about programs that will help people access capital to grow their $1 million, to work their way to that $1 million portfolio. Because we all have those financial goals when we're doing real estate. We want to grow our portfolio here. And even if you're working with a wealth manager like Donald, that's your thing. I have one of my financial advisors, he's always telling me, is like, you got to have those financial markers. So is there any programs that you can suggest to the group?
I mean, program.
Mike, I'll jump in real quick, just on the wealth management side. So depending on how consumers kind of feel about debt, SBA has, as a small business owner, SBA has been good for us. We've been able to get access to capital for low rates in the 3s and 4s, and like, you can generally generate a better return in 3 to 4%. So the leverage works good in that type of situation. One of the tools that we have access to with our custodian altruist is, they take assets under management. So if you have a brokerage account and you have whatever in it, for Pat's example, he takes 2 million out of his property. He's able to sit it in cash and get highest highest in market rate, right? So you can get a riskless 4%, is covered up to 2 million, right? Which is a little bit higher than 250,000. But the other benefit, right, is they have regional banks that are kind of built in that look at his investment account or his savings account as an asset, which it is, and they provide asset-based loans, right? And so the reason they do that is because they don't want him to liquidate his investments and take capital gains. They want him, and they want to kind of keep that money in custody. So they give him, sometimes a dollar for dollar, or maybe a leverage of 1 to 2 line of credit. So he could have $1 million to $2 million, and since it's asset based and it's secured by the assets that he already owns, he pays the floating rate, which is, it changes, but it may be at 3.8 right now, plus 2%, right? So that's on the debt side. And then I think, what Vern said earlier, NAC is a great program. They cover 100% of your closing costs. You get the lowest interest rates. So NAC is good here in the state of Nevada. We have different affinity programs, for teachers and down payment assistance or grants that are kind of tied in to the down payment of purchases. FHA is good for the 3.5%. And then there's also, programs with banks and credit unions to where they, use state and federal funding to subsidize the down payment to where, a 5% conventional loan can come down to 1 or 2% down, right? So what I can do is I know, we're recording. I can get you some links to kind of put out as we redistribute this. But yeah, I think those would be some of the resources that I can kind of put forth.
Thanks. And please feel free to drop your emails. What I was going to say that at the end of it, drop your emails so people can contact you. We'll come back to that. Vernon, really quickly, and then we're going to open it up for questions unless you want to just go straight to questions.
Yeah, I think we could go straight to Q&A. I did want to just announce, something that I think is a progression of wealth, right? I think you get your first piece on the board, like we said, but once you have that first piece, I think there's two things that you do from that point, and it's really getting into assets that are above 4 units. And the reason why you do that is because you're getting into commercial real estate, and the ability to create value in commercial real estate is quite astounding. Because the banks, when they value commercial real estate, they value it based solely on the income and the expenses. Other than if you have a property that's 1 to 4 units, they value that property based on comps. So you're really pigeonholed in the 1 to 4 unit category to what sells in the community, what the comparative sales. But in commercial real estate, when you have 8 units, they're not using that as a weight. That's not a weighted part of the evaluation. So you can take a property like we've done. We've taken, properties from 280 to 600. We just took the waterfront property from 650 to 1.8 million. And again, those kind of like creating that kind of wealth within a year is almost, I wouldn't say impossible, but it's tough in the 1 to 4 unit market. But my point is, you get the first on the board, go to commercial real estate, and then you can actually branch out into technology, right? And I think everybody on this call today, one thing I want to impart is to really start to learn about AI agents. Being in San Francisco and being there in the Valley, in Silicon Valley, I'm really learning how relevant and prevalent AI agents will become to our world moving forward. And pretty much an AI agent, I'll land it, I'm not going to be long here. An AI agent takes a specific task that a human does and is able to do it just as good or if not better than the human. So different tasks could be anything. And for us at Equity, one of the, I guess, bottlenecks that we found when people wanted to raise capital or to go for their first commercial asset or go from 2 million to 5 million, the first hurdle was them to create a compliant offering memorandum, a prospectus, a document that is a legal document that provides a breakdown of your offering. So I just want to kind of just show you guys really quick, and this is a cool moment because we are at this very moment we're showing you our newest AI agent, which is called Omar. Omar stands for the Offering Memorandum Auto Reporter. And essentially, it gives you, if you go to the EquityShare.ai website and you log in, you go to our AI agents part of the website, and you click on Omar. Now you'll see Omar. So this is where you're able to drag and drop different documents into Omar, and it parses out all the information. If you have, let's say you have a business idea at 8 a.m. In the morning, and you can place and drop the documentation about Omar that you have some preliminary information that you have about your business or your the new property that you're looking to acquire. And what it does is it parses out all the information and then it creates a comprehensive 30-page offering memorandum that has all of the compliance documentation available, everything that you need to be able to raise capital efficiently and legally. So this is something that I encourage everybody that's on the call to try it out. If you have an idea that you need to raise capital for, use Omar. But then also, this is a call to action for everybody on the call to think about different AI agents that they can create, because this will become ubiquitous, right? We will be able to create AI agents without code, So if there's a task in your business, in your profession that you believe can be automated, thinking about how to tag into AI agents using OpenAI, which everybody here probably uses ChatGPT. So OpenAI is the company that owns that, and you would use the API for that. So I'll land it there. But this is the way that I see you taking that $1 million portfolio that you've built over that decade or wherever it takes, and then taking it to a whole new level where you're owning technology, owning the IP, and really taking it to an exponential level.
Thank you so much. And please drop that link so they can access that.
I'm going to drop it here. Yep.
Thanks, Vern. So if you have a question, can you just please raise your hand? It's the React feature. If you have any questions, if you could also drop your questions in the chat. But would love to see if there's any feedback. You guys are definitely going to be able to connect with the panelists via their emails as well. So if anybody has any questions, let us know. All right. Nothing in the chat. Okay. Javon, you coming on?
Yeah, hi guys. Just wanted to just say thank you. And just want to say I appreciate the insights and the optimism, particularly right now with things being said, and it's good to hear an optimistic path. My question is just very, very low level. If there would be one piece of advice from the panelists, what would that be to someone who's looking to start from scratch and to get to a point where they can get to that level? Thank you.
I'll start, Jay. I appreciate that question, man. I would say the number one thing is to exercise your tolerance for risk, right? So exercise your tolerance for risk, meaning on a daily basis, try something new. And those little moments of trying something new will give you the kind of the muscle memory that you're going to need when an opportunity comes in your lap. Because the opportunities are going to come in our laps, and it's going to be a decision whether or not we're prepared to take that on, right? And I think that's going to be the key for us as we go through, because if we're not ready to, if we see an opportunity, we see a property, we saw it, it's in our neighborhood, it's a 3-unit, we could do it, we could buy it. If we actually put the wherewithal behind it, we can do it, but we tell ourselves not to because of XYZ. But my point is, let's be prepared for that moment. And Equity as a brand and as a part of the culture at this point, we want to be a partner of yours, right? So if no matter if it's your first property or your 10th property, it really is my passion to help people acquire assets. So I'll land that thought there. And thank you, Patrick. Thank you, Don. Of course, thank you, Mike, for this insightful conversation.
Yeah, and we like to be punctual here because we know you have things to do. It's also a time when people start picking up their kids start coming home. So really quickly, if you want to follow us, please go to equityplatforms.com and learn more about us. Just really quickly, I want to discuss this. Equity Platforms is a public benefit corporation focused on building community wealth through real estate assets and blockchain technology. The company was created to make real estate ownership and rental income more accessible for those who have been historically marginalized, by providing an opportunity for investors to collectively invest in real estate. I know that was a mouthful, but you can also find us on LinkedIn. We're pretty active on LinkedIn and across all social media platforms. So please connect with the panelists. Donald dropped his email in the chat. Vernon, please drop your email in the chat. And once again, we want to thank the panelists, Donald Wong, and we want to thank Patrick Toussaint for their time and energy. This has been phenomenal. We do these about once every other month, but we do have some IRL events happening, both that are just specifically for our token holders and some for the public. But we'll keep you abreast if you keep following us. So thank you so much for your time, and everybody have a great day.
Thank you.
All right. Bye-bye.